I'll just start with the top and bottom line. We're seeing 89 cents adjusted for earnings per share. That is 5 cents higher than what the street anticipated, up 82% from a year ago. So it is decelerating, but still higher. On revenues of $39.3 billion, that is higher than the street anticipated. And I'm also seeing data center revenue coming in at $35.6 billion. The street was anticipating 33, so also a slight beat. We'll get back to you with the guidance.
All right. Christina Partsinevelos, thank you. Still combing through that result. Stephanie Link, want to get your reaction to this with a beat on the top and bottom lines. And it looks like data center revenue a beat as well, and the stock spiking about 3.5% right now.
Well, revenue beat. That was good. I think there was expectation that revenue was going to beat. So obviously very positive. But data center, I think, is all driven by the data center. When you have the street that was looking for 34.1 billion, that would be up 11% sequentially. And then the number was better than expected at 35.6. So that's up 12% sequentially. That should be good enough. But I think at the end of the day, we just have to hear the conference call. I think this is the most anticipated conference call of the season, of the earnings season, because we want to hear more details about DeepSeek. We want to hear more about Blackwell and the capacity supply issues and that sort of thing. And then, of course, we want to hear what they have to say about the data center build out in general, from Microsoft to Meta to all the big names, where all the CapEx is going. So I think we have to wait for the call, unfortunately. But the numbers look good to me.
Yeah, and even beyond the call, of course, Jensen Huang is going to be with us on CNBC after he talks to analysts for even more detail. Pat Moorhead, no big surprises here. It looks like beats pretty much across the board, but we have to dig more into the margins. And of course, you want to hear about Blackwell, right?
That's absolutely right. I did expect a double beat, and maybe that wasn't too hard to figure out, but I know there are a lot of bears out there that question about. Everything that I want to know is in the CFO commentary and on the call, right? We need to understand details about the Blackwell rollout, supply chain clarity. I would love for Jensen to come out and be very direct on DeepSeek. I've been on your show before saying DeepSeek.
Commentary from Jensen Huang in the release as well. And I know we're going to go back to Christina Partsinevelos right now for more from these results. Christina.
Well, just to your point, that bullish commentary, he said, quote, "We've successfully ramped up the massive scale production of Blackwell." So did John.
He can touch up more details on more than a as far as is concerned. But I think the reaction here is the stock's up a little bit. What we've seen with Nvidia since last summer is multiple rallies ending on a positive day and then an intraday reversal, indicating investors selling into strength. So I think the real key that I'll be watching is tomorrow. How does that stock react? Do we see strength, or if we do see strength in the morning, does it immediately get sold off? And if it does, that'll just tell us that the stock continues to be in a distribution mode rather than under accumulation.
For the fourth quarter of fiscal 2025, Nvidia reported record sales of $39.3 billion, up 78% from the previous year and 12% from the previous quarter. Data center sales exceeded $35.6 billion, up 16% from Q3 and 93% from the previous year, driven by demand for processing related to AI. The overall revenues for the fiscal year doubled to $130.5 billion, representing an annual rise of 114%. Net profits for the quarter jumped to $22.1 billion, up 80% year over year. GAAP profits per diluted share increased 82% to $0.89, while non-GAAP EPS increased 71% to $0.89. For the entire fiscal year, net income surged 145% to $72.88 billion, while GAAP EPS rose 147% to $2.94. The non-GAAP profits per diluted share were $2.99, up 130% from the previous year. The company is scaling down its AI-related computing activities, according to CEO Jensen Huang. According to him, there is a tremendous demand for Blackwell, since reasoning AI introduces a second scaling rule, which states that increasing computing power for training makes models smarter, and increasing computing power for extended thought makes the answer wiser. On Wednesday, Nvidia stock ended the day at $131.28, up 3.7%. As of 7 o'clock p.m. ET, shares had dropped 0.3% in after-hours trading to $130.91. The company forecasted first-quarter revenues of $43.0 billion, plus or minus 2%, with GAAP and non-GAAP gross margins of 70.6% and 71.0% respectively. Nvidia's artificial intelligence capabilities are being included into the architecture of major cloud providers, including AWS, Google Cloud, Microsoft Azure, and Oracle Cloud. Additionally, Nvidia disclosed a partnership with Verizon to deploy AI computing on private 5G networks. The gaming company reported $2.5 billion for the quarter, an 11% year-over-year decline. Thanks to partnerships with Hyundai and Toyota on AI-powered car systems, the automotive industry saw a 103% annual increase in sales to $570 million. On April 2nd, Nvidia will pay a 0.01 quarterly cash dividend to owners of record as of March 12th. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
The guide was also above, as you mentioned. Now, earlier today, speaking of demand, I was talking to Amazon CEO Andy Jassy. He told me that as of now, if he had more AI resources to sell through AWS, he could sell more. That's kind of the short-term signal of demand that you talked about on the call. Tell me more about the midterm signals that investors should be aware of that give you confidence in the continued demand, the scale-outs of data centers, AI factories, relative to what you've historically seen?
The short-term signal are just our POs and the forecasts. And on top of that, the things that are not forecasted are new startup companies that are spinning off. And some of these are quite famous. And, you know, at the risk of forgetting any of them, I won't mention any of them, but there's some really, really fantastic startups that have come out as a result of new reasoning AI capabilities and, you know, artificial general intelligence capabilities that they have breakthroughs in. And there's several of them that are related to agentic AIs, really exciting companies. And there's several of them related to physical AIs. You know, there's just handfuls of each one of them, and each one of them needs additional compute. And that's, you know, the type of things that Andy talks about, because they need to go to AWS and they have urgent need for more compute right away. And so that's on top of what we already knew to have POs and forecasts and such. The midterm comes from the fact that this year's capital investment for data centers is so much greater than last year's. And of course, we had a very large year last year. We had a great year last year. It stands to reason that with Blackwell and with all the new data centers going online, we're going to have a fairly great year. Now, long term, the thing that's really exciting is we're just at the beginning of the reasoning AI era. You know, this is the time when AI is thinking to itself before it answers a question. Instead of just immediately generating an answer, it'll reason about it, maybe break it down step by step. It'll do maybe some searching in its own mind before it creates and composes a smart answer for you. The amount of computation necessary to do that reasoning process is 100 times more than what we used to do. So if you could imagine, we thought computation, the amount of compute necessary, was a lot last year. And then all of a sudden, reasoning AI, DeepSeek was an example of that. ChatGPT 4o is an example of that. Grok 3 reasoning is an example of that. So all of these reasoning AI models now need a lot more compute than what we used to we're
let me stop you there,
that puts even more load.
Because some people took DeepSeek to mean actually that you need less compute, right? Because the initial report was that they were doing more with less. But you're saying, in fact, some of what came out of DeepSeek was the opposite, that there's going to be more compute demanded. Unpack that for me.
There are three phases in how AI works, how AI is developed largely. Number one is pre-training. It's kind of like us going through high school. A lot of basic math, basic language, basic everything. That basic understanding of human knowledge is essential to do what's the next step, which is called post-training. In post-training, you might get human feedback. You know, it's like a teacher showing it to you. We call it reinforcement learning, human feedback. You might practice and do thought experiments. just preparing for a test. You're doing a whole lot of practices. We call it reinforcement learning AI feedback. You could either also do tests and practice, and we call it reinforcement learning verifiable reward feedback. So now basically it's AIs teaching AIs how to be better AIs. That post-training process is where an enormous amount of innovation is happening right now. A lot of it happened with these reasoning models. And that computation load could be 100 times more than pre-training. And then here comes inference, the reasoning process. Instead of just spewing out an answer, when prompted, it reasons about it. It thinks about how best to answer that question, breaks it down step by step, might even reflect upon it, come up with several versions, pick the best one, and then presents it to you. So the amount of computation that we have to do, even at inference time now, is 100 times more than what we used to do when ChatGPT first came out. And so all of a sudden, the combination of all these ideas, largely related to reinforcement learning and synthetic data generation and reasoning, all of this is just causing compute demand to go sky high.
The company's AI activities are expanding as a result of the planned corporate deployment of new AI computing infrastructure and agentic AI solutions. Nvidia reported fiscal Q4 earnings that were better than anticipated. The company's AI-focused data center division continued to generate substantial revenue growth, albeit at a slower rate than in prior quarters. The business announced adjusted earnings of $0.89 per share for the quarter that ended on January 26th. Revenue, which above Wall Street's estimates, increased 78.8% year-over-year to $39.33 billion, with revenue of $35.6 billion, up 93% from the previous year, and surpassing projections of $34.1 billion. The data center division continued to be the best performer. But this growth rate slowed down from the 400% spike a year ago and the 112% increase in Q3. The outcomes for other business segments differed. While professional visualization revenue increased 10% year-over-year to $511 million, automotive revenue hit $570 million. The $2.5 billion in gaming revenue was 14% lower year-over-year and fell short of the $3.2 billion forecast. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Yeah, well, it's hard to get straight answers out of China, especially from the Chinese government. Josh Brown, there are a number of other stocks in the market, and I'm thinking about software mostly here, that follow NVIDIA's lead. I'm putting Dell and Supermicro and some of those equipment makers aside. What is your expectation for how the AI trade overall digests the overall optimistic story that Jensen not only told to analysts, but told us here on CNBC tonight? What does that mean for the overall narrative of AI's growth and potential?
So I think, broadly speaking, people are going to wake up tomorrow and digest 48 sell-side notes, most of which will be some form of overweight / bullish / accumulate. I know they keep coming up with new ways to say we like the stock. But on balance, what they're going to read from the analyst community is, I think, once again, like a sober version of awestruck. I think the sell side is going to try its best to keep its enthusiasm in check, but they're talking about the second half launch of Blackwell Ultra on the conference call. And somebody's like, well, wait a minute. You had a hiccup with Blackwell. It launched a little bit late while you dealt with that. Are you still seriously coming out with the upgrade already in the second half of this year, the new version? And Jensen's like, yeah, we're doing this. So I feel like you're going to get a buoyant tone from the sell side. And I think that will extend to the other names that you mentioned, John. But NVIDIA is really unique. I don't think there's a substitute. And again, at 29 times forward, there doesn't need to be. I don't think you have to buy the fourth best. Look at the people that bought AMD a year ago. It's in a 50% drawdown. You know how many people bought that stock saying, I don't know, Lisa Su and Jensen Huang, they're actually cousins. Jensen used to work at AMD. I missed Nvidia. I'll buy AMD. I always find that to be a mistake. It's not that none of the peripheral stocks can work. I guess what I'm saying is if you have a portfolio without Nvidia and you're trying to make a bet on autonomous vehicles, machine learning, augmented reality, virtual reality, data center, don't miss this name. And don't go looking for the poor man's version.
I got
it's
it.
Right
pick
here
your
in
favorite.
Front of
you pick your favorite, and you got your favorite, and it's working. Cassie, you're meeting with clients talking about AI. How much are they talking about the possibilities and trying to understand that and the performance that they need for those possibilities versus concerned about costs at this stage? Where is the conversation with these people you're talking about?
The conversation is very little about costs, very much about possibilities, and also very much about the completely different paradigm that some of these technologies require in terms of thinking about ROI. What does it mean to figure out the value of a generative AI system working at scale in the enterprise? And so what we see is for individual users, it's enough that it feels useful. But scale demands to be measured. When we're going to do things seriously at scale in the enterprise, you have to rethink all your frameworks of value and of automation. And we are on the cusp of management getting the hang of that. And that is going to be such a phenomenal blossoming of use cases. And then we're going to talk about, oh no, how do I actually get enough of what I need, not just in terms of hardware, but also in terms of experts who can help.
All right. Josh Brown, last word for you here. Is this the place where you can buy NVIDIA still?
Yeah, I mean, I would love it. It rallied 4% into the print tonight, so I would love it if it pulled back 4% for people that are not in it. I'm not buying more just because it's already big enough in the context. It's a 10,000% return since 2015. So I don't need more NVIDIA personally. But if somebody does not have this in their portfolio, I don't think it's a wild stab in the dark to be buying it here. And, quite frankly, if you're not in it, I think the lower it goes, the better.
As expected, NVIDIA's adjusted gross margin was 73.5%, while the company's free cash flow for the quarter was $15.52 billion. NVIDIA anticipates Q1 FY26 revenue of $43 billion, 2%, which is little higher than the $42.3 billion predicted by analysts. In addition to highlighting the quick uptake of Blackwell GPUs, CEO Jensen Huang pointed out that artificial intelligence is developing at a never-before-seen rate, with agentic and physical AI influencing the next wave of industry change. NVIDIA's performance continues to demonstrate the high demand in AI and high-performance computing, although some analysts pointing out that last year's shock value was missing. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.